This was a fairly significant resistance level at the 1000 level that took place here that took a very long time to break through it. Do I think it's going to take that long to break through the 14,000 level this time? Probably not, because it seems like every time we hit a new resistance level, the time in which it takes us to break through to that level, above that level, consolidates and it is shorter and shorter and shorter. This time a significant level was broken through at the 10,000 level, and it only took about a year and a half to do that. Another resistance level at 11,500 was also broken through in less than a year. So I don't think that it's going to take that long to break through this 14,000 level if we can break through it. Remember, whenever there's an exuberance in price here, there's always a back off and a consolidation. How long we're actually going to be in some sort of consolidation phase, going between, let's say, 13,400 and 11,500, I have no idea. It could take years before we get out of this consolidation area and we attempt to break through 14,000. But I am pretty sure of one thing. If trend in history is our guide, eventually we will rise up to that 14,000 level and we will break through it and we'll have another exuberant run up in prices. It seems as if every time we break through the significant resistance levels, we have an exuberant run up in prices. We did it here. We did it here. We did it here. I mean, prices just blasted. We did it here, and we had tremendous bull markets after breaking through significant resistance points. So my point in all this is simply to give you a basis, a framework for making a decision and having an understanding of where prices have come from and what is significant about the price at the current moment. So if you don't know where you've been, in other words, how do you know where you're going? That's the idea. And the idea too is that you should do some historical research on the price of your stock, because prices are personal to the individual that bought or sold at those levels. In other words, if you purchased a stock at $20 and now all of a sudden it's at 10, well, you're going to be feeling some pain because you've lost money. And when it attempts to rally back up to $18 or $19 again, you may decide, hey, I'm almost whole, I can get my money back, I'm going to sell as soon as it gets close to 20. And that's what causes these types of resistance points, because if they bought here, they're all the way back down here, and they come back close to that level again, they can sell and get whole, they can sell and get their money back, and that's exactly what happens most of the time in most of these stocks. So on the indexes, you want to take a long-term historical perspective, at least to have the understanding that the movement of prices up and down significantly is pretty much par for the course. Prices go up, prices come down. Prices go up, prices come down. Prices go up, prices come down. And like I mentioned in the beginning of this course, there's only two truths of the market. And as far as stocks go, they will fluctuate in price. Now, determining the direction of markets is really it really is an art, and you don't need to determine markets in order to be successful in the markets. You don't need to know where prices are going to be headed all the time. The couple things that you do need to be aware of are support and resistance points in which prices have backed off from significant prices, just to get an idea of what will happen to your position. The idea here is to manage your risk. And in order to manage your risk, you need to know where these support and resistance points are. They're not always intuitive, but the way I draw support and resistance points is simply by seeing how many price points these bars will touch. For example, as soon as a price bar touches a particular price level, let's take this bar right here, this white bar right here. This price bar is a weekly price bar. If we took this bar and we said, okay, well, you know what? For this week, prices, started out very high, they came down to this level, and then they closed back up at this level. I'm sorry, about this level right here. And this seemed to be a turning point. This level right here where I have this little dot seemed to be a turning point. It turned that around to bring the market back up again. So when it broke through it again, okay, it was no longer a resistance point. Now, or I'm sorry, this was a support point. Now it's no longer support. It now has become resistance. Now that it's broke through that. And actually what happened was we consolidated for a while, and it did come back up to that price level, which is the same price level here, and it bounced back down twice off of it, which now makes it even more significant price level. Let's go to a daily chart for a second. And instead of doing all, let's just do the last 9 months. This was the point I was referring to here. Prices came down and it reversed significantly off of this price level. They did eventually break through it, so it was no longer support. But over time, they did come up and test that price level again here and here. At these points, it sold off significantly. At this point, it sold off even more significantly. So there's some resistance at this point. Now, here's something that's very interesting. Remember we talked about how when resistance on the upside is broken through, usually there's an exuberance to the upside. Well, because we have a prior history here, the exuberance may not be as strong as it is if it breaks through this 14,000 level. If it breaks through this 14,200 level, you're going to see significant price increases over the next few months. And that's the time to get generally long in stocks. But right now we're still in this consolidation period. Let's go back for at least 1 year here so we can see how far this consolidation period goes back. You can see that we broke through the 11,500, and since then we've gone up to 14,200. So in this level, we have a fairly significant wide ranging prices in which we're just kind of floating around here, not making any progress to the upside, not making any further progress to the downside. And the way I measure the resistance points is the same as what I've just told you here. When I see a price level and a dramatic reversal from that price level, either to the upside or the downside, I highlight it with a little oval. I go to my drawing tools and just take out the oval tool. And I just make the ovals wherever I feel it's significant. So when I see these levels and I'm thinking about putting on particular positions, especially for the monthly income trades, what I like to do is, let's say the time that I'm putting these on is right around the 3rd week of the month, right around where the expiration is. So for example, I'm right in here on the 22nd, which was the expiration probably for the January options. Is this a good place in which to put on trades in which I'm hoping that the price will, fluctuate back and forth, plus or minus around this price level? Well, knowing historically that when we have significant sell-offs in the market like we had during the month of January,